Cheers to consolidation on this beautiful Wednesday evening, retail trading team. This is your routine debrief. And as you can see, we are drinking tea today because, like a good contrarian, I bucked the January trend and drank a little too much in January. So we're drinking tea, and we're still going to have the same good time as we discuss today's beautiful market action. So we're going to jump right into the warm up after I take a sip. Okay, so warm up document, you can find this in the description. This is a document that I update by 10:30 Eastern every morning, and it's really been doing a good job of giving a, we'll say, roadmap of sorts to the day. So it's just kind of putting together a bunch of different metrics over time. I think we have a pretty good set. And so let's just kind of review what was suggested early this morning and compare it to what actually happened. So the warm up implied, if you just kind of put all this together, that we would have a slow grind down with a range that was greater than our overnight range. We had a pretty thin overnight range, less than 30 points, and the day's range was a little bit more than 40. So if you were just kind of watching the playbook, we were looking for that short at about that overnight pivot near 4170. You can see that the high was right about there, is 4168-ish. Admittedly, I got in a little lower. I didn't get in until about that 4154 area, I believe, somewhere around there. Yet the document really, it told the tale, and it was despite what I saw as some nice attempts at maybe breaking us out toward that 4100 and 4090 area that we'll talk about later in the video. We stayed pretty tight. We saw that slow grind really from about 11:30 on. It was just chop, and we did end the day nearer to the lows. Yet we never broke what you'll see in the next few charts as the primary trend line. So we held that channel support. It's about 4120 on the SPX, and we didn't see that trend in the VIX either. The VX, well, as we look at that chart, you'll see we kind of moved toward the upper side of its range, but you did not get that breakout movement. You did get a bit of a stalling near that high as the market began to chop. And I'm going to actually fill in the close of the VIX here because that'll be important until tomorrow. And while we're here, why not do it? So the VIX did close at 1963, still slightly higher. I think it's a pretty good amount higher, about between 4 and 5%. So you did see that volatility stay in the market. We didn't completely lose it at the end of the day. And as we go into news tomorrow, that might be important. Yeah, as we look forward, I think it's really about that CPI on Tuesday. I think that's going to be the next strong breakout movement. So any short-term movement here that we see, I would take with a grain of salt. Again, look at the pattern. I think we're in for a bit more of the trappy type tape before we finally do get that breakout, which will either be confirmed or perhaps we'll even get some type of reversal on Tuesday. So let's just kind of look at what to look at. For the remainder of the 0DTs for this week. So we're going to first start with the weekly chart just to kind of get our bearings on the general market, which I think is still bullish. You have to assume bullish. Maybe you don't want to call it a bull market, but you have to assume buy the dip stays present until we pop back below that major trend line. You can see it's going to be at about that 4,000 area now. Very nice, 400 SPY probably, if I had to guess. That's just kind of that dominant support of the bulls right now, and so we're still looking for potential opportunities to buy the dip, in my opinion, before we go below that trend line. We're still filling out this inverse head and shoulders, and that is just the general look. I think 0DTE day to day, as we'll get a little more granular here. I don't think it's so important to be watching that trend line until we're right near it. But just kind of keep in mind that this buy to dip mentality that we've been seeing, we could probably expect it to continue as long as we are above that trend line. So if we look at it on the daily, just in terms of raw price action, it still looks flaggy. So this consolidation here, a lot of your price action technical analysis traders obviously incorporate technical analysis, but your just dominant price action traders are gonna say this is a flag, and it does look like a flag on this time frame in this chart. Yet, I want to point out a few things. So first of all, let's take note that we are in a supply zone up to about that 4250 area and really starting at about 4100. So that's the first thing to look at just in terms of the price action chart. And when you get more granular and look at our chessboard, which is a 30-minute TPO, again, you see that flaggy type consolidation right currently on the underside of supply. Yet you also see two dominant TPOs. So the first one comes from today, and then the second is a combination of TPOs from earlier in the week, outside of the update that we had for Jerome Powell's party. You're seeing these B-shaped TPOs, and a B-shaped TPO can mean a lot of things, but really the most important thing to keep in mind is that a B-shaped TPO signifies long positions leaving the market. So could they be leaving the market super temporarily, just waiting for a catalyst to pop back in? Yes. Yet the presence of this B-shaped distribution, this type of action is implying longs leaving the market. So what it tells me is, especially as long as we're below that prior week POC, is that we have to maintain that short bias. And I want to direct you back real quick since we're talking about our various setups. If you go to this document, you can see our volume profile setups. You can read all about them, which may explain kind of my perspective in terms of the value area high, POC, and value area low. Again, this is not my work. This is the work of many people, better traders before me. So I'm just kind of parroting what they discovered. But anyways, point being, below the POC, that implies a once we get a sound rejection, which we haven't had yet, assuming we get that sound rejection, we move toward that value area low. And so you have a couple important value area lows that are super nearby. So this is the prior week POC, yeah. The monthly POC is just for February. But really, once we get rejected by this prior week POC, if obviously we break through this flag, that's implying a move toward the prior week value area low. And what do you see corresponds to the prior week value area low? I'm going to draw any ellipse that I did not before this video. Check out this area here. You have the prior week value area low, but it's also the prior month value area high. So to me, that's a super magnetic area. Really, that 4090 number itself is kind of the first test, but even if we start to bleed below, you have those two strong supports there as well. And if we want to look at it just from the 365-day perspective, so again, there's a lot that just came out there. So just to review, these trend lines here represent that flag consolidation we're seeing, yet bigger picture with the B-shaped distribution, so with the longs exiting the market and with our current location below that prior week POC, I would say the highest probability uh, outcome, possibility, whatever you want to call it, is that we do make a move toward this prior month value area high and prior week value area low. Do we get quite that low? I'm not sure. And so now we can move on to that macro chart and just kind of discuss the first major. I'm gonna draw another arrow here. The first major area of demand, and it's going to be that low volume node that you're seeing from currently 4090 to 4100. And this is just how it appears in the higher time frame chart. So I really want to move to the hourly chart. So this 365 day, that's the first major low volume area that I see on this chart, and this is what it looks like on the hourly. So you have basically no volume from 4090 to 4100. You can just see this is just a bunch of blank or a bunch of empty space, and it's, in my opinion, going to act as a magnet for price until we get some type of activity in that zone. So I think that ascent, again, you can see that B-shaped look on our weekly profile. I think that the first move out of this, the highest, I would say the probabilities are highest that the first move out of this consolidation is at least a fake break into that 4090 zone. And so that's just kind of what I'm looking at until we get back above that private POC, until the TPOs start changing. I see it as longs exiting the market for at least a brief move to fill in some volume in that low volume node from, again, 4090 to about 4100. And if they want to take us to retest the value area low itself, and perhaps even lower to the monthly value area high. That's going to be at about, we'll say 70-ish, 70 area, um, for kind of the extension down. And I'm a dip buyer first at 40.90 if we start to see any signs of a strong reversal, and then this will be a rare time that I think it is justified to add to the position at that 40.70 for a potential move from there. Below 40.70, obviously we can see the extended move down to that prior month POC, and perhaps start breaking down and retesting that trend line. Yet, obviously, before we get there, I think this is going to be a nice, strong demand zone, and at the very least, I think it should be good for a rotation scalp play. So, obviously, not trading advice. You know the deal. This is just how I'm going to be looking at it moving into tomorrow, and obviously Tuesday. But Tuesday we'll obviously have at least one or two more videos before Tuesday. I think we have to see how this week plays out, and then reevaluate. Then that's the big CPI move that could easily move 100 points in either direction and just kind of negate all the pretty things that we see in the short time frame. So again, this is more for the 0DTs leading up to our lovely CPI announcement. Let's see. Oh, one more thing from that volume by price hourly chart. So what I'm liking, as we look at this Globex section right now, you're seeing that RSI recharge, and again, I think that's actually good for the bear case. I think that we want to see that recharge in this Globex session. So for tomorrow's news, if they really want to move it, then it's not a super significant event. It's just a few jobs numbers. But if they do decide to move it, then we'll have that RSI recharge to get us down to 40.90. RSI is a fickle indicator, but it's always nice to see that at least near the center of its chart. Really more to invalidate it than anything. So that's kind of what we're seeing currently, and we'll see if it sustains the rest of the night. And just to cover one more all-important chart, let's take a look at volatility here. Okay, so I took a bunch of the indicators off. Really what I'm watching on volatility for the next few days is how we react to this channel. It's not a pretty pattern. You call this head and shoulders. You call this overall pattern. Maybe that's an analog for an inverse head and shoulders. I don't know. I'm just watching this channel for the next few days. And as volatility kind of tests that pivot high and if it starts to get above, you got to assume again that's just adding to the short-term bear case. And as long as we're below, I think that we're just going to keep kind of chopping around. I think we're just going to fill out again. Let's just look at the pattern on the chessboard chart. It's my favorite chart right now for what's going on. Yeah, sure, we go back up to 41.70. Maybe we go back to the monthly value area high. Heck, maybe we even go to the prior week value area high. That doesn't, we don't necessarily have that breakout, I think, until CPI. So what's more than likely, if they do want to continue the sustained chop, is we might pop above here, hang out around that monthly value area high, maybe pop in here. A really good fake break move would actually be. So tomorrow, I'll just say I don't really think this is going to happen, but hypothetically, if they do pop it above that prior week value area high and give us that short entry, that's a good fake break play. Again, I think that we could get decent moves out of this consolidation. It's kind of the same thought both ways. You move up here, fake break down, move down here, fake break up, but it's really CPI that is going to dominate the next trend cycle. So yeah, so 40. So again, I'll review these numbers one more time before I make one more comment on the VIX. That's 40.70, we'll say, to 40.90 zone is where I'm looking to buy the dip. And I'm not going to mess around too much in the middle of the chart here in this monthly value area high, but if they do pop it to that prior value area high, I will be looking for potential fake break short there into CPI as well. So just finally to reiterate and really look at what's going on in volatility, this is the all-important chart to me. That trend line is important in terms of price action. Yet since the beginning of the bear market here, we've had those sell-offs when the VIX popped below 20. We're still, be it basing, be it consolidating, but whatever, we're hanging out still just below 20 on the VIX. So it's really important, I think, to watch what happens on this VIX futures intraday to kind of gauge how that trend is going to behave. So that is our VIX. That is also our briefing. So as always, please feel free to tweet Routine Trader on Twitter, at Routine Trader on Twitter, with your thoughts. I'm also happy to answer any questions you may have in the comment section of this video, and the newsletter will be back soon. So um, that's exciting. I'm glad to finally have that sorted out. And yeah, so please, if you enjoyed today's content, do give it a like because that helps with the YouTube algorithm. And with that, until tomorrow, stay classy.